We're jumping back, way back actually, to 1910.
Yeah, digging into a really foundational text for traders.
Exactly. We're looking at Richard D. Wyckoff, writing under that great pseudonym Rollo Tape and his classic Studies in Tape Reading.
A cornerstone, really.
Totally. And our mission here is to pull out that core philosophy. You know, the mental stuff, the technical skills Wyckoff thought you needed to actually read price action.
And it's amazing how relevant those ideas still feel today.
Right, because back then, tape reading, I mean, just imagine it. This narrow paper ribbon spitting out stock trades that was revolutionary. It was this attempt to build a science, predicting the market's immediate next move just by watching that tape. Wyckoff called the skill rapid-fire horse sense.
Yeah, great traits.
So yeah, we're diving into what this intense focus, this art, really demands from you.
Well, Wyckoff was pretty clear right off the bat. Tape rating, for him, it was the science of figuring out the immediate trend, just from the tape.
Not fundamentals, not long-term cycles.
No, none of that. The key goal was judging supply and demand right now. And crucially, figuring out if the big players, the large interests, were accumulating stock or distributing it or actively marking prices up and down.
So like an inventory manager.
Exactly.
Yeah.
He used that analogy like a department store manager or even a fruit vendor, needing to know instantly what's moving, what's sitting, quick inventory turns.
And what's powerful is also what it throws out, what it's not.
Right. Big time.
If you're doing this, Wyckoff says, you're not trading the news. Forget tips, opinions, rumors, all that noise is out.
Yeah, he was very explicit. And interestingly, he also rejected trading based purely on chart patterns or other mechanical methods, which is kind of ironic because people often link Wyckoff only with charting later on.
That's a good point.
But this pure tape rating, it wasn't even that simplistic buy the dip, sell the rip stuff either. It was way more real time than that.
And the stories he tells, I mean, they show the power of just observing. Like Joe Manning.
Oh yeah, Manning's a great example.
Started super small, right? Just a few $100, trading tiny lots.
And built that up to, what was it, $100,000 in active trading capital.
Yeah. And supposedly purely from reading the tape's language.
And then there's the legend Jesse Livermore.
Of course.
Traded only the tape.
Yeah.
Famously got out of everything before the market closed each day. No overnight risk for him.
Smart.
But the killer story is him calling the 1907 panic.
Okay, wait. He actually anticipated that massive crash just from the tape.
That's what the source suggests, yeah. Apparently, he took out a pretty big loan for his car, like $13,000.
Okay.
Just so he could use $5,000 of it to short the market. The tape was telling him trouble was brewing.
Wow. That takes conviction.
And he reportedly made millions. That wasn't luck, It wasn't reading headlines. It was seeing that supply-demand shift way before anyone else.
That kind of story, taking out a loan to bet against the market, it really shifts the focus to the person, doesn't it? The qualifications.
Absolutely.
And we're not just talking about like quick reflexes here. It sounds like a whole mental overhaul is needed.
Oh, Wyckoff hammers this point home.
Yeah.
The mental qualifications, way more important than just being okay with losing money sometimes.
So what's key then?
Number one is self-control, capital S, capital C. He means the power to just completely shut down fear, anxiety, getting too excited, being reckless.
Basically turn off your emotions.
Pretty much. Train your mind so it only obeys the tape, not your gut feelings.
But hang on, absolute concentration, years of painstaking effort just to watch a paper tape. That sounds incredibly demanding. Why not just use a chart, a system?
Well, his argument was that no mechanical system could capture that momentary feel, the subtle shifts in supply and demand. He believed you needed years of practice because you had to learn to spot the footprints of manipulation in real time.
You had to become a detective almost.
Sort of, yeah. And he insisted. You had to dedicate your whole time and attention to it. You couldn't learn this by reading the evening paper. He literally prescribed 27 hours a week at the ticker in seclusion and constantly analyzing your mistakes. Why did that trade go wrong?
Okay, so the seclusion thing. It's about blocking out other people's opinions, the tips, the gossip.
Exactly. That stuff instantly messes with the focus, the mental machinery. The tape demands your undivided attention. It's a tyrant, in a way.
Okay, so if your mind is like properly shielded and trained, how did Wyckoff say you should actually operate, practically speaking?
Well, first things first, protect yourself.
Yeah.
Financially and mentally. For newbies, the rules were strict.
Like starting small?
Very small. He recommended starting with just 10 share lots, not the 100 or 500 shares, the average lamb, as he called them, jumps in with.
Right, the lambs get slaughtered.
Exactly. Risking the minimum lets you learn without blowing up your account right away.
Okay, that makes sense.
And here's a really interesting psychological trick he advised. Measure your wins and losses in points, not dollars.
Points, not dollars. But isn't the goal dollars? Isn't that just like kidding yourself?
Well, think about it. The feeling of losing, say, $500 versus $1,000 is very different, right? It carries emotional weight.
Sure.
But if you just focus on whether you gained or lost, say, 2 points, it keeps you objective. You're judging your analysis, was my read on supply and demand right, not worrying about the rent money.
Okay. It detaches the decision from the immediate financial impact. Keeps it technical.
Precisely. It removes that emotional baggage.
Wyckoff was pretty brutal about failure too, wasn't he? Said overtrading was.
Financial suicide.
Yeah.
That and not having enough capital, he blamed those two for like 50% of business failures generally.
Wow.
So the message is clear. You need to be financially stable outside of your trading pot. If you're stressed about money worry, he called it, you just can't think clearly enough to read the tape properly.
Trading for bread and butter is a recipe for disaster then.
According to him, yes. That clear head is vital for execution. Because if the goal is speed, acting on the immediate trend,
Then how you place your orders really matters.
critically, Wyckoff was adamant. Orders go in at the market.
No limit orders. No trying to shave off 1/8 of a point.
Absolutely not. He called that haggling over fractions foolish. Think about why. The second you start thinking, should I wait for 164 1/4 instead of taking it at 164 1/2?
You've stopped watching the tape.
Exactly. Your mental machinery gets interrupted. You're focused on some arbitrary fraction, not the actual flow of supply and demand. His view was, if it's a good buy at 164, it's still good at 164 1/4. Get on board or get left behind.
Okay, get on or get left. I like that. And once you are on board, protection stops.
Essential. Loss limitation is key. The consensus he found among successful traders was about a 2-point maximum loss on a trade.
2 points, okay. But he preferred a mental stop over an automatic one, right? Why?
Yeah, that's a really crucial point. An automatic stop, like a preset order, is rigid. What if the tape starts screaming, get out, before your arbitrary price level is hit? Maybe heavy selling comes in just above your stop.
You'd want the flexibility to react immediately.
Precisely. The mental stop lets you respond to the tape's signal of reversal instantly, based on judgment, not just a fixed price. It's about being nimble.
Okay, that makes sense. Shifting gears a bit, strategy-wise, you can't watch every stock ticker flying by. How did he suggest focusing?
Well, the data pointed him towards active higher-priced stocks.
Why higher priced?
Simple reason. They move more points per day, generally. He gave an example like a $150 stock might swing 2.5 points on average, while a $50 stock might only move 1 point.
So more opportunity for those quick in-and-out trades the method requires. Volatility is your friend.
Exactly. More swings means more chances to apply the technique within a single day, and that naturally leads to concentration.
Right, you can't master 50 stocks this way.
No way. He strongly advised picking just 1 or 2 stocks and studying them exhaustively. Learn their habits and characteristics, he said.
He even personified them, right? Like comparing them to animals.
Yeah. Stubborn, sensitive, aggressive. You needed to know how your chosen stock typically behaved under buying or selling pressure. Deep familiarity.
And he even listed the big movers of his day, the big 6.
Union Pacific, Reading, Steel, St. Paul, Anaconda, Smelters. Those were the titans.
And they dominated trading.
Apparently, yeah. Something like 80% of the daily volume might have been in just those few leaders. So watching them gave you a real-time pulse of the overall market sentiment.
Okay, so focus on the leaders, which brings us right to volume. That seems central.
Oh, absolutely critical. Volume is where the tape reader gets the inside scoop, so to speak.
How so?
Well, large volume confirms the importance of trading those leaders, for one. It shows where the real muscle is. But more importantly, it reveals the actions of the manipulators, the big fellers.
Because they can't hide large trades.
Exactly. To accumulate a huge position or to distribute one, they have to deal in large blocks. And those large blocks print right there on the tape. They inevitably show their hand, as Wyckoff put it.
So the tape reveals the footprints. You're looking for signs of big money moving in or out.
That's the core of it. He saw manipulation as a 3-step process. 1, accumulation, that quiet buying. 2, marking up, pushing the price higher deliberately. And 3, distribution, the quiet selling at the top.
And the tape reader's job is to spot which phase is happening right now.
Right. looking for those footprints in price and volume activity.
Which actually makes those boring, quiet market periods important, doesn't it?
Hugely important. Most people hate dull markets, right?
Yeah.
Nothing's happening.
Yeah, feels like wasted time.
But Wyckoff saw dullness differently, like nature's remedy after a big run-up. The market pendulum comes to rest, and that quiet period, that's often when the unseen accumulation is happening right before the next big swing starts.
So the dullness is actually an opportunity to detect the start of the cycle.
For the skilled tape reader, yes, a crucial time.
This all leads to the ultimate payoff, right? Timing, getting in or out before the crowd.
That's the edge, and he had that perfect example to illustrate
No.
it, the consolidated gas story.
Oh, right, the Supreme Court decision. Tell us about that.
Okay, so Consolidated Gas stock was waiting on this huge Supreme Court ruling. Everyone knew it was coming. Finally, the news hits the general news tickers. You know, the Dow Jones Newswire at 1:10 p.m. Decision is bad for the company.
Okay. Stock tanks, presumably.
It did. Broke down hard to 135. But here's the kicker. Wyckoff notes that by the time the news announcement came out, it was already too late for the public.
Why? What happened before 1.10?
The tape had already told the story. Minutes before the official news broke, the tape showed sudden, heavy selling pressure. Stocks started breaking key support levels.
Ah, so the insiders, or people close to the decision, were already dumping their shares based on the news before it was public knowledge.
That's the implication. And the tape readers, watching only the price and volume action, saw that selling pressure build and could react before the headline confirmed it.
That captures the whole philosophy perfectly. You make money by anticipating, by reading the real-time flow, not by waiting for the news and joining the herd.
Exactly. It really drives home that it's about skill, it's about science, not just getting lucky. Wyckoff's whole method is about discipline, intense study, concentration.
And trusting the tape above all else.
Totally. Becoming, as he put it, almost like an emotionless automaton who just observes, weighs the evidence on the tape, and acts. No nerves, no hopes, no fears, just execution based on the data stream.
That focus on the raw data, the physical tape back then, it really highlights the need for the purest, fastest information source.
It really does. Which kind of leads to a fascinating question for traders today, you know?
Yeah.
Well, if that physical ticker tape was the ultimate primary source of truth back in 1910, what's the equivalent today? What real-time data stream gives you that same raw, unfiltered signal?
Before the news hits, before the crowd reacts.
Right? Is it level 2 data, the order book, time and sales, the microscopic shifts in the bid-ask spread? The principle Wyckoff championed is the same. Follow the real indications of price and volume, not opinions or news. But you have to ask yourself, what is that primary data stream for you right now? That's the challenge.